Vincenzo'S Gold Crypto Investing, and I wanted to bring you this update and correlate some things like I've been doing for you over the last couple of months, linking the stock market, the dollar, the Fed, and crypto, and how that all correlates together. And look at this real quick. Let's take a look at what we got going on here as far as this correlation. Now, I got some things dialed into the background, and what I want you to pay attention to is look what we got here. This green horizontal line in March of 2020 is when COVID happened. You can see the COVID dump in Bitcoin. And then this green arrow, this green horizontal line, is when the Fed started easing. They drastically reduced interest rates to zero, and they started massive money printing in March 2020. And you notice crypto tanked, bottomed out, and pumped, right? Now let's look at the stock market, right? Let's go to the Dow Jones, because I'm in the United States. You can see the stock market did the same thing. You can see right here, COVID dump. You can see here the COVID dump clearly, right, with our industry exclusive purchasing tool. And this is very important, the COVID dump. And I've talked about this extensively, and I feel like we need to talk about it again today, more or less in the current price moving up and down. And then I'll put in some theta, as I had a subscriber request for some price targets. You can see you had that big COVID dump. You went from about 29,600 and you dumped to about 20,000, even 18,000. I think it got down to in a wick down here. But then they reduced interest rates here and printed money. And you can see you had a huge rally in the stock market, right? You see that? Now, if we go to the dollar index, oops, that's crypto. We go over to the dollar. You can see what happened, the exact opposite. Right there in the green horizontal. Oh, we need to move that to March. No, March. Where's March? Bam, right there. You can see the dollar briefly rallied when COVID started, and then the dollar tanked. So you notice that. You have quantitative easing starting in green, this green horizontal line right here, right? This is where quantitative easing started, and they lowered interest rates to zero. You can see the dollar tanked, right? And then we go to crypto. We go over here to crypto. Crypto pumped. See that? Dollar tanked there. Crypto, big bull market, right? To all-time highs. Look at all that. Big bull market. Fed-induced bull market. Fed eases. The dollar tanks. Crypto pumps to all-time highs. And the stock market. You go to the Dow Jones at the same time. The Dow Jones goes to all-time highs. See that? Crypto, stocks, all-time highs as the Fed eases interest rates to near zero and prints an unprecedented amount of money, and the dollar tanks. But now look what happens. The Fed starts quantitative tightening, right? Or they just started talking about quantitative tightening. If we go back to the dollar, right, where I have it marked in red. So you see here in the dollar tanks, quantitative easing, massive money printing, and the dollar tanks, right? Crypto skyrockets, stocks skyrocket. And then in December or January, they started talking about easing right here, right? You see the dollar tanking, and then as the language in the Fed started to change directions late in 2021, and you knew early in 2022 there was going to be quantitative easing coming, or quantitative tightening, you can see the dollar started to rally. And post quantitative tightening starting and raising of interest rates, the dollar's rallied, right? So quantitative easing and money printing, the dollar tanks. Quantitative tightening and raising interest rates, the dollar rises, right? So you see that. But then you have the inverse correlation to crypto. Look what's happened to crypto since the Fed started quantitative tightening. Look at this. From the time they started easing and the dollar crashed in March of 2020, crypto went to an all-time high. Oh, come on. It went up 1,000%, right? Nearly 1,000% from its swing low. But since quantitative tightening started, just on the talk of it, you started going down, right? But once they officially announced it, you're down in crypto 40% since quantitative tightening started, and raising of interest rates and destroying of money, right? So you see that. You see the correlation there, and the same thing goes to the stock market. And that's how I've been able to correlate all this to you out ahead of the competition and out ahead of the moon boys and the market manipulators and the guys that are out here trying to fleece, heist, and shiest you on MSNBC, CNN with the Bitcoin nonstop promoting. And you can see the Dow Jones is tanked. And that's how we all knew, that's how I could correlate this together for you. And this is going to continue to go down until the Fed reverses course. And this is very important to understand what's going on, right? And that's why I've tried to correlate this with you, right? And now we had some, now that you see that and what the method to my madness is, and that's something very important that you need to be paying attention to, and that you need to be correlating and paying attention to, right? About how that all works and how that all affects the markets, right? And then what we have, theta and we got theta and tfuel. Let's see what we got here. Let's pull these up. I used to have these on here, but then no one talked about them in a while. I don't know if I have them. They would probably be in my altcoin list. There's theta. Let's look at theta. You can see theta, we haven't talked about in a while, but we're hitting these underneath targets down here. We've already went through the $3. And I remember this at $15. I told you theta would come way down. Now, if you're looking for a big buying opportunity to start accumulating, you can see the volume indicator right here. And there ain't much volume anywhere except way down here. And now let's go start to work through this volume indicator. You can see we had nice volume right there locally. So we're going to mark that in white. As we know, we keep our volume indicator areas in white. And then we go back down here. There ain't much happening. But you can see we had another big area of support in the volume indicator down here. Right? Up against the major big one down there. You can see we had one right here. So we're going to go ahead and mark this down here. We need to zoom out. We'll zoom out that, and we'll scroll that all the way over. And you can see how that does line up pretty good with where you had some support and resistance. You see that? We're just going to slide this all the way over into the future. And then we're going to come back here and make sure it's on the right spot. See that? We had some nice volume right there in this local region. Right there. Come on, go over there. We had a big volume compared to what was going on from the one above it to the one below it right there. So we're going to mark that. And then we're going to lock it. But if I'm looking at this, you can see where the major volume profile range is. And that's all the way down here in the shit house. And we're going to mark the shit house in theta. And this is your major volume area. All the way down in the shit house. And this is where, if you're going to try to buy this coin to try to accumulate for the long term, this is your best area. And we're going to put the shit house in red. As we know, the shit house is always in red. And we're going to lock that. So if I'm looking at theta right now, besides up and downs, a quick pumps and dumps, you can see our last arrow, we were telling you it was coming down. Let's get rid of that. You can see we've come all the way down. And if you're trying to long-term accumulate this, I think you're coming all the way back down to the shit house. Could there be a pump somewhere? Yes. But I think before you can even try to accumulate in a safe zone, I think you're coming down to this major volume range between 37 cents and 28 cents. And that would be a good accumulation spot right now. And that's my call on theta. I think you're coming down to the top of the shit house. And that's a 75% move down still. Can you pump up? Yes. on some kind of big pumps, you could pump up and hit upper resistance. You can see the 200-day moving average in green. But if you pay attention in the weekly, you got the 50 in red, the 100 in blue, and now it's long enough in this coin to have the 200-day all trending down. So on any kind of pump rate here locally, you're going to get rejected by the 200-day. That's as high as you would get, right? Your next swing trade possibility could be 79 cents up to the moving average, right? But if you're looking, like you said, the long-term hodl, this is my first area where I would take a position and start buying for a long-term hodling position down here between 28 cents in that 33, 34 cent range at the top part of the shithouse. I think you're coming down there. The volume indicator seems to show it, and I think you're in a long-term bear market. So if I'm trying to find strategic spots to try to long-term hodl, 28 cents is a beautiful area that I would target, right? And we'll circle this. This would be an area where I would target based on the volume indicator, based on a bear market that we're in, and based on a lot of downside coming. 28 cents would be a fair zone and an educated zone in a probability-based area to start to long-term accumulate down here in theta, right? And then we have tfuel. I'm not sure what the call letters are for this. tfuel. Hopefully this is just what the call letters are. That appears to be it. Theta tether. So we're going to go into theta. You can see we had this too. Look at that. We had some TA on here a long time ago. And we had some underneath price targets. We hit that 16 cents, and then we broke that major area that we showed you with our two tops, and we were calling for big flush in this, because I remember when this was a hype train pumping up, and I told everybody this had a long way to come down, and then everyone forgot about it, and nobody cared about it after the hype train. So now you can see how the chart looks ugly. This was back before we started making charts beautiful. But you can see we broke that area, and already, even without the volume indicator, I can already highlight areas where we need to go. And you can see in this coin too, just like the other one, all the major volume is traded down here. That's why we're slipping so quick. And if I had to try to buy this and wanted the long-term hodl because I have confidence in this coin, I wouldn't be doing it till you get down here into the shit house, right? And we're going to lock that because the shit house is down here. I would be waiting to do any kind of long-term hodling positions, and that's what you're saying, till you get down here. Oop, that's not what we want. Let's put a little price label down here until you get down here into this 17 or 0.017 cent range, right? Because that's where your major volume is. I would wait till you're in the shit house and maybe even pretty deep into the shit house, right? But I wouldn't long-term hodl this or accumulate into this like you're asking until you get down into the shit house, because I think you can save yourself a 73% fall, and I think that's going to happen very quickly in tfuel. I would wait. I personally don't own any of these two coins, but if you've done the research and you like these projects, I would wait till you get to the top part of the shit house to flush out all this hype up here. As you can see, there ain't no volume up here. You can see these volume indicator. There was a little bit of volume up here, but as soon as you broke that, you're flushing down fast and hard, because all this is open space until you get to this area right here, and it's just above the major volume support area. So I would wait until you get down there at the bottom part of the shit house to try to accumulate, right? Like, subscribe, and share. Peace and love. Peace and love.